We have a possible new client coming into our office later today, and I was thinking about this discussion in the context of my appointment in a few hours, and I think what's going to happen there is very transferable to situations that you will encounter. I don't know if the client needs our help, and if they do, I don't know if they will choose to work with us. They're coming in because they were referred by their attorney. They've updated their estate plan and they want to review their life insurance to see if it's functioning effectively for what their needs are today. And when people come to see us with existing policies, they usually come for one of two reasons, and I'm going to give you a couple of examples of both. They come because they don't know if their insurance is really cost effective for what they want to accomplish today and going forward, and they want to get that checked out. The second reason is some people know that their insurance is, for lack of a better description, messed up, and they want help getting it fixed. And I've got a couple examples of both. If you take a look at the key life insurance questions, which is at the top of the packet of your handouts, these are the same questions that I'm going to discuss with our prospective client later today. And they're pretty straightforward questions. Do you know what your do you know what you want your life insurance to accomplish for you, your family, or your business today and going forward? Life insurance contracts are forward-looking. They're going to last for a while, and so looking into the future is important. Secondly, how much life insurance do you need to accomplish these objectives? Third, how much life insurance do you have in place now on your life, on your spouse's life, and on your business associates, whatever is appropriate? And you can judge things by these questions. Usually clients can articulate an answer to the first question. They know what they want to accomplish, or with some discussion they can come to what they want to accomplish with their insurance. Very often they do not know how much life insurance it will take to accomplish their objectives. And you may be surprised if you ask people what they have for insurance now that's currently in place. A fair amount of the time what people think they have and what they actually have are somewhat different. And how quickly people can articulate answers to those three questions will give you a good feel for whether clients have reviewed their insurance recently or whether they haven't. And these questions will be applicable for every client whenever they want to deal with it. The fourth question, and I'll talk a little more about this in the remainder of our discussion today, is sort of a sleeper question that clients don't think about. A lot of times advisors don't think about, and it can really jump up to bite people and cause their insurance programs either to unravel or be much more expensive than they anticipated. And the fourth question is, will your life insurance continue as long as it's needed? If you have term insurance, how much time remains on the term insurance policy before the premiums increase? If you go to the next page on the outline, right behind the outline, it's clipped together there, or stapled together. It's just a term insurance illustration for a 52-year-old male. And what it shows is that the premium is about $3,000 a year for 20 years. He's healthy and a non-smoker. It's a very good value. In the 21st year, the premium goes from $3,000 to $88,000 and goes up from there. Most people have, or I shouldn't say that, some people have an awareness that at some point their term insurance premiums are going to increase substantially. What most people really don't know is when that will occur and whether that's consistent with their current objectives. And one of the things that's further back in our outline is with the economic downturn a few years ago, people are working longer, they're not selling their business as quickly as they might have anticipated, and in many cases they want their insurance to run until they retire, or some of their insurance to run until they retire. And if that date has been pushed back, their policy or policies may not continue long enough. We're doing that investigation for the attorney who is referring the client to us later today. He has a term policy that will expire in about 3 years. And it's not only does the premium go way up, it just quits. It'll be done. And he is 60-ish now and is planning to work for another 10 years and would like to have some or all of his insurance continue for most, if not all, of the next 10 years. And he has some health issues now. So we're in the process of identifying how cost-effective continuing term insurance will be and what his choices are. But at the present time, the continuation of his policy for 3 years, which we did not write, it was written some time ago with another agent, is not long enough. And that's a very common situation today. The second part, if you go back to the fourth question there, if you have cash value life insurance or permanent life insurance, how long will the policy continue based upon current interest rates or current investment returns and current premium payments? If I don't leave you with anything else today, the reason this discussion is important is that the very low interest rates and their continuation for some period of time to this point and probably going forward is putting a lot of pressure on the life insurance companies. They have to have their reserves invested conservatively, and the interest rates are lower than what's been anticipated, and they are lower than what was projected when policies were purchased several years ago. And it doesn't make the policy bad, it doesn't make the insurance company bad, it's just the current reality. And as a result, most non-guaranteed policies are underperforming what was anticipated at the time the policy was purchased. The questions are, how much is it underperforming? What's the impact of that? Is it a problem or not? And 3, if it is, what do you do to fix it? And clients don't know this to a large extent, and I'll give you a couple examples here in just a second. And so these are fairly straightforward questions that you can ask a client, and you don't have to have the answers, but by asking the client the questions, you will have a sense as to whether or not they're on top of these issues or whether or not they might benefit from some additional analysis and review. Let me talk for just a moment about the key questions again, and they're on the bottom of page 2 in the outline, and it's the 4 key questions that we talked about earlier. And then there are 4 more questions that we get involved in that are part of the analysis that we need to undertake when we're doing a detailed analysis for a client. Number 1 is the life insurance cost effective. And this in the outline, it's number 5. Number 6, is your life insurance tax effective to maximize the value for your family or business after income and estate taxes, if estate taxes are applicable? Is your life insurance with a financially strong insurance company? And also, are your life insurance cash values and death benefits adequately protected from the claims of creditors and or divorce? And sometimes this isn't an issue, other times it is, and it may involve trust planning to get the insurance outside of the estate and outside